Good. Good evening, everybody. I'll call the special council meeting of December the 12th to order at 5:30 PM. And ask if there are any amendments to the agenda.
For you, Mayor Mullins, I have none.
Thank you. The motion that the agenda for the special council meeting of December 12th be approved as presented. Moved by Councilor Lego, seconded by Councilor Timpson. All in favor? Carried. Thank you. Declarations of pecuniary interest.
For you, Mayor Mullins, we do not have any declarations of pecuniary interest, pardon me, but I did want to let council know that we do have regrets from Councilor Bowe this evening.
Thank you. And we have one delegation, in open session, and then we go into closed session. So staff, I'll let you introduce the delegation for the consolidated audited financial statements for 2023. Staff.
Great, thank you very much, Mayor Lawrence. And so members of council, as we're bringing up the Zoom feed here on our TVs, joining us this evening from our auditors, Grant Thornton, we have Richard and Adam. So welcome to you both. Thank you so much for being available to present what I understand. I'm sorry to give away the goods before the meeting starts, but I understand we have a clean audit this evening, which we're always happy to hear about. So we will, now that I've taken your thunder, I'll turn things over to you, Richard, to present the 2023 audited consolidated financial statements for the municipality of Sioux. Thanks.
Great. Thank you very much, Brian. I will be sharing my screen momentarily. There's going to be two documents we'll go through essentially today. One will be the audit results strategy and results package from the audit. It's one of our requirements to council and through our professional standards. And the other one will be the audited financial statements. And I'll be taking you through the results of them and basically providing some context in terms of what activities happened in the year and obviously open to any questions. So I will share my screen as a starting point just to get the things up on the screen. So hopefully this will work. Can you see my screen, the one that has the municipality's name directly on it?
Yes, we can. Thanks, Richard. That's great.
Perfect. So just to start off, I was going to say, unfortunately, Adam actually couldn't be here today. So I actually have Evan Merlot, who was the in charge on the engagement, who actually was on site in Sioux Lookout to perform the year-end audit. So he's going to be present with me for this presentation. And like I mentioned, we're going to start off with the audit strategy and results. So first things first, the purpose of this document primarily is to develop that two-way communication between ourselves, management, and council to discuss essentially what our audit strategy was and the results of those procedures, including anything else that would be relevant to bring to your attention. Again, this information, this document is primarily for the use of council and management only, and it's not intended to be distributed to the public. So as a result, the status for audit is substantially complete as of today. A few things that we'll need to do to wrap up the audit is get signed management representation letters, which is common practice as we have in the past, as well as getting some signatures from council members. On there, you'll note that we have some legal letter confirmation responses. As of today, we've received all of our confirmation responses from legal, so there's nothing outstanding there. And then procedures regarding subsequent events is just some conversations with Carly and Brian in terms of any other impacts we should be aware of before issuing the finalized statements. Here we talk about the approach as well. I'm going to save the approach conversation until we get to the appendices. The summary here basically gives a little bit of insight in terms of how we determine our approaches, but I will save that for later on when we have a little bit more into the appendices. So in terms of audit risks and results, one of the things that we do start with, just because of the fact that there has been a lot of impacts within our economy, is we had a conversation with management to really understand, is there anything as a result of the economic environment or events that are happening that would impact your operations? You'll note here that we talk about considerations such as inflation, labor shortages, and as far as to talk about the ongoing conflict in Ukraine and other economic factors. May sound a little silly, but it is our requirement to understand if there is any impacts. So we went through our risk assessment and conversations with management, and through our audit procedures identified and agreed with management's assessment that although there are economic environment effects that are happening, the impact itself is not significant enough for us to have any adjustments or additional disclosures in the financial statements. But we did do this assessment to make sure that there isn't anything outside of the normal scope of the audit that should have been completed. In terms of significant transactions, there was a lot of activity within regards to your tangible capital assets, additions of about $11.4 million. These additions primarily related to assets under construction, which was about $9.6 million. This related to the Hillcrest project, the Big Wood project, and as well various other road projects. So you can see there below what the additions was, what the amortization of those assets were, and what the disposals are. So our audit approach here is that we reviewed these capital additions and disposals recorded by management at year end. We tested the significant additions from invoices and progress billings that have come from the various constructors, and as well ensured at the end that the amortization that was calculated within your citywide program where your assets are maintained are appropriate and consistent with prior year and your accounting policies. And so we didn't identify any concerns with your additions. They were all substantially supported. Disposals were not very significant, but verified the disposal assets from your system. And we didn't identify any biases through management's adjustments or activities. On the government transfer side, again, government transfers tends to be a pretty significant revenue stream for the municipality. This year, just over $4.8 million. Some of the significant government transfers that happened in the year relate to the NOHFC and FedNor revenue, about $2.5 million, as it relates to the Hillcrest and Big Wood project, and OMPF funding of about $1.5 million. There's other government transfers that are there, but those are the most significant. Similarly with that, there's also deferred revenue still available of funds of about $2 million where the expenses have not yet been incurred so that those revenues can be recognized. In here, what we do is we review essentially a listing of all your government transfers in terms of what government grants have been recognized as revenue in the year. We will look at the contract agreements to obtain and understand the nature and extent of the grants for the selected testing and dig into anything where there may be differences between our expectations and management's. Similarly, we confirm the cash inflows from the grant agreements and other correspondence from those ministries or funding agencies. And then what we do is test those expenditures for eligibility for conditional grants. A great example of this is those capital projects that were completed where we did look at those grant agreements to verify management was recording them and recognizing them in appropriateness with the different subcategories that were within that agreement. Similarly, we also ensured that your accounting policies were consistent under public sector accounting standard and consistent with the prior year, and we did not identify any management bias. One thing we did note was one non-trivial unadjusted misstatement. It's not big enough or a large enough concern for us to bring to management's attention to adjust, but we did identify some smaller differences within AR and revenue that is just recognized as unadjusted, but will clear itself up in the following year, which is why it was not adjusted by management. In terms of significant risks, these are areas of focus where it goes beyond it just being large. It could be a complex area, it could be something new. This is standard with where we were in the past with the fraud risk from revenue recognition. Again, for any type of audit that's completed, our standards require us to focus on some revenue stream where we believe there is the most amount of risk in terms of revenue recognition. In this case, because a lot of grant revenue has to be supported through the incurring of eligible expenditures, we focus on government transfers and conditional grants to be our area of focus. So similarly, very similar process that we've accomplished through our government transfers testing. However, in this situation, we put a little bit of a higher lens associated with some of these grants, especially the larger ones, as we discussed, to ensure that the stipulations are met and that there's no concerns or issues noted, and there were no significant exceptions noted or anything fraud risk related from revenue recognition noted. The big ticket item this year, and I will thank management in advance for all the work they've done with this, is the adoption of PS 3280 asset retirement obligations. This was a big topic discussion we had in regards to the 2022 year end, where the accounting standards have changed in terms of how we recognize this. Now, just to summarize, asset retirement obligations are any type of obligations that need or have a legal obligation for the municipality essentially to cover or take down. So great example is like your landfill liability. So this was quite a process in terms of it. One, because we had to restate essentially the value associated with the landfill liability with the new asset retirement obligation procedures. And again, not only that, but we also needed management support based on your asset listing to take a step back and address why there isn't potential risks of asbestos in some of your buildings. So it was a process of getting pictures. It was a process of looking at engineering reports. It was a process of looking at old records, basically to verify whether or not there was any use of anything that would be considered hazardous that will involve some liability to the municipality. So as a result, what we've done here, applying the accounting standard, is recognize an obligation of about $1.75 million, recognized to the liability, Your tangible capital asset costs were increased by about $918,000. There's accumulated amortization on that asset about $288,000, and accumulated surplus balance was reduced by $461,000. So that's the impacts in the current year, but we also had to do a restatement for the prior period because that's a change in accounting policy that was applied. So I'm not going to read through the third paragraph because essentially we restated last year's numbers to reflect those changes, but it's a continuation onto this year. So it's almost as though this obligation has existed from the beginning of time, and we adjusted it accordingly so that it would be presented that way. So again, we reviewed building condition assessment reports, expert reports, engineering reports, essentially to verify which buildings may have risks of asbestos, and then work with management to develop essentially what that risk is or what that dollar value may be. We also go through the process of recalculating the asset retirement obligation calculations based on the time value of what the cost will be in the future, essentially to decommission those risks. And through our procedures, we have no exceptions to note. Management's been really great with working with us to get this resolved. And it's a big part for municipalities that many have struggled with. So I give kudos to management on following through on that aspect. The other fraud risk we identify is a fraud risk for management override. So during our review of internal controls and consistent with the past, we recognize that the municipality does have a segregation of duty concern. Again, this is because of the fact that you have a treasurer, Carly in this case, who does have access to the financial accounting system and has the ability to make adjustments as required without there being a formal review process or someone reviewing it. So normally someone like Carly wouldn't have the responsibility of posting journal entries, but more or less read access and have a team that posts these entries. So as a result of this fraud risk, we do look at the journal entries that were entered into the system throughout the year, specifically the ones that were made by Carly, because there isn't a formal review process that's developed there. So we looked at those transactions to identify, does anything look out of place or outside of the standard journal entries, and focused on specific characteristics surrounding the journal entries where there was no description or areas where it may perpetrate fraud. So in our testing, we went through the process of identifying those journal entries that looked I would say unique to the year itself. And a lot of it did tie into our government grant transfers. A lot of it did tie into year-end financial statement close processes. And we had no exceptions to note that there was any concerns with journal entries posted. And last but not least on here, fraud and illegal acts in general. Through our risk assessment process and through our audit, we always have a sense of professional skepticism on anything we look at. And again, when it comes down to fraud or illegal acts, if we were to find $1 of fraud or something that was stolen, we would have to bring it to your attention as counsel. Fraud doesn't have a materiality figure. Fraud is fraud. And therefore, if we did identify anything through our inquiries with management or through our audit work, we would bring it to your attention. However, I'm happy to note that nothing has come to our attention that indicates any director, officer, or senior employee had any conflicts with their responsibilities of the municipality, and there was no fraud or illegal acts identified. In terms of accounting practices, this is where we focus on areas where professional judgment is required from management. And in this case here, there's 3 estimates that we identify as being larger for your municipality, which is the allowance for doubtful accounts, the asset retirement obligation, which we already talked about above, and the employee future benefits. The allowance for doubtful account relates to tax receivable balances at year end where collection of receivables is considered uncollectible. So essentially you can see down below in terms of the chart that right now your allowance for doubtful accounts on taxes receivable is just over $1 million. This number was larger in the past, so there has been some movement associated with this. But again, we assess management's estimate in terms of what's been allowed for, what's not been allowed for based on potentially how long it's been outstanding. And so we reviewed those balances and went through the process and didn't have any concerns noted with management's estimate. Similar with employee future benefits, management relies on an expert, which is Dixon Actuarial Services, to ensure management has properly recorded and disclosed the details relating to the employee future benefits liability. So really when we look at this document, we ensure that if it's a brand new valuation, we actually validate the information that they've provided to the actuary so that there is no errors or omissions that should be included in the report that the actuary is not aware of. And we also make sure that once we finish that process, that management has not deviated from that report. And so we're happy to say in this case, management has not deviated from that report. They've recognized the adjustments in line with what the actuary recommends. And so we didn't identify any biases or concerns. In terms of adjustments and uncorrected misstatements, so just to clarify for council, if we note an adjustment on your audit results package, it means these are adjustments that we recommended for management to post to be reflected in your accounting system. So normally these would have been identified as unadjusted differences or uncorrected misstatements, but for the purpose of the audit were recommended to management, and management decided to post them. So some of the adjustments we have here, there was a small opening balance adjustment difference, nothing too significant there. Reconciliation of reserve and reserve fund activity. This process has improved from last year. We used to do some bigger adjustments, but management did a great job reconciling that process for us this year. Recognizing the activity associated with Sioux Lookout Hydro Incorporated. So again, the activity associated with their financial statements. We adjusted the future employee benefits to actual as well through the actuarial report, so through our review and management's adjustment. You can see here that we reversed the landfill closure and post-closure liability. So last year, if you were to look at these statements, the asset retirement obligation would have actually referred specifically to the landfill liability. So because of the adoption of the new handbook section, basically this was reversed, and we recognize essentially the new asset retirement obligation for the landfill, which you will notice is quite different in terms of value from what we had before. And that's because the standards have been updated essentially, or a new standard has been provided to try to provide a more accurate reflection based on the timing of when the landfill is going to close, the cost of borrowing funds at this point in time, and discounting to today's date to reflect what we believe the estimated cost would be at year end. So as a result, our adjustments have adjusted your assets to increase by about 755,000. Your liabilities have increased by about 1.1 million. Your accumulated surplus has changed by about 252,000, and your annual surplus changed by about 152,000. So those are all adjustments that have been currently reflected in your accounting system. Similarly, we had to do a prior period adjustment essentially associated with the adoption of PS 3280. And so this is just reflecting in your prior year figures. And again, it's to recognize as though that asset retirement obligation existed since its inception of when you incurred that liability. So this was a matter of making sure that it followed the standards, but otherwise just wanted to note it here that that was the implication of adopting PS 3280. For the Public Library Board, there was only one adjustment that was recognized, and this is recognized associated with municipal's contribution. Following the standards under public sector accounting standards for the library, there was an advance of transfer of funds made to the library that related to Q1 of 2024. Because of the fact that there's limited stipulations associated with that funding for the operations of the library, that this is really there to support its global expenses, the transfer is recognized as revenue. So that transfer, although it relates to Q1 of 2024, our standards require that revenue be recognized in 2023 because the funds physically have transferred to the library. So there was one larger adjustment that was noted there, and that's reflected as well within the municipality audit as well. As for the trust funds, we had no misstatements to note, no adjustments that were required. In terms of uncorrected misstatements, there was really only two things that we identified through the course of our audit that was not adjusted. One was associated with the understatement of government transfers, and this relates to the Bigwood project and Hillcrest. Now, this is just mainly a timing issue, so it's not that the funds are not going to be recognized as revenue, it's just a timing matter of based on when the claims were made and when the funds were to be received. The other piece that we noted as well, and this has to do with the timing of the previous audit's completion, but we noted an overstatement of audit fees. Because of the overlapping of us finishing the audits at a later time, the expenses when they arrived in were recognized all within 1 year. So management recognized 3 years of our auditing fees essentially within the audited financial statements. And so we recognized the fact that those should have been accrued effectively in the previous years as well. It was picked up this year just because of the dollar value did meet our threshold to adjust it and recognize it. With that being said, we have no other trivial unadjusted misstatements associated with the Public Library Board or trust funds. And the summary of disclosure matters, there's none to identify as we assist management in the preparation of the financial statements. In terms of other reportable matters, really only a few things. One, internal control. We've definitely seen some improvement in internal controls from last year based on our audit results. Again, we don't express an opinion over your internal controls, but as we need to get an understanding of your internal controls to effectively develop our procedures, we have to understand how does it work and how does it operate. If through that process we identify a deficiency to bring to council's attention, we will note it in a document and identify options for management to resolve this issue going forward. The one item that we identified in the year-end audit, as there was, as I mentioned, improvements in the year-end audit, was the segregation of duties piece, which, again, the only way that the municipality would remove that is if there were more individuals within the finance role or there was separation of certain responsibilities from your treasurer. The cybersecurity piece, again, I will say through our experiences, we hear more and more that I will say some individuals think we're kind of over the hump of cybersecurity, but we continue to encourage this conversation amongst council members and management to ensure that they have the right security and protection of your data and information. So again, this is a piece where we just want to make sure that this is a conversation that's happening. Council's asking management the questions of what's happening to ensure we are protected. So that way no information gets lost or no funds or assets are held as ransom. So we just want to make sure we're bringing that to council's attention. And then last piece here is the independence. Again, in order for us to become your auditors, we need to ensure that we maintain ourselves in independence in fact and in appearance. So again, if there were any independence matters that we needed to bring to your attention, we would have brought it immediately once it was identified. I'm happy to note that we have no concerns with any independence matters with our engagement team members. We have maintained our independence from start and throughout to the finish of our audit. Just some technical updates, and this is more, I would say, for management's consideration, but there isn't any big changes coming anytime soon, such as this asset retirement obligation piece. But technically, for your 2027 year end, which I know is quite a ways away still, the public sector accounting standards are changing quite significantly. The financial statement presentation of what you see today is going to look a lot different in 2027. So there are some changes coming to the public sector world. Again, there is the opportunity for early adoption if management were interested into it. But at the end of the day, that's going to be management's decision along with council's consideration as well. But at the very least, this will have to be implemented for your 2027 year end. In terms of our assurance aspects, that's really focused around changes to our audit processes or procedures. So again, this is here for management's consideration to understand that, again, if there's changes coming, these are considerations. We're happy to have the conversation with management to provide perspective or direction, but this is there just to highlight some of the key considerations. Okay, in terms of our overview and approach, so again, I was mentioning at the beginning how I'll save the approach discussion. This is consistent with what we talked about last year for those members of council who were in the meeting, but essentially for an audit to be successful, everyone has a role and responsibility to be there. Council yourself as management and ourselves as your auditors as Doan Grant Thornton, we all have responsibilities. When we go through our approach, essentially what we do is we do planning and assessing risk and evaluating our internal controls first, and then we do a development of the different tests and accounting transactions. So really, before we even actually start looking at information for your municipality, the first thing that we do is assess where do we think the highest risk of material misstatement is within your municipality. And again, when it comes down to an audit, we don't verify 100% of all your transactions. We focus on areas where we believe that there could potentially be errors that we need to focus on. And again, that's going to be focused on where fraud risk might be available, where it's unique or new standard adoptions, along with other considerations that management might bring to our attention. So where we are right now is in the concluding and reporting stage. We've completed our testing, so we're just really presenting the results now to council. Similarly, this is a group audit. Again, there is other organizations or other operations that are considered in this audit, which is the Sioux Public Library, where we do perform a separate audit for that one as well, but at a much lower materiality level. Sioux Airport operations are completed within the municipality itself, where we do a significant amount of substantive testing associated with the revenue that's been collected, but as well with the expenses incurred for the fuel that's purchased for those operations. And then Sioux Hydro, where essentially we rely on BDO Canada's reviewed audited financial statements of Sioux Hydro, but as well as their audit results. So that if there is any concerns that were identified for that audit, because they're consolidated within this audit, that we would have considered that impacts for this audit so that we can decide whether we can rely on the work that BDO has done or not. And in this case, based on the results of that work that was completed by BDO, we have no concerns associated with relying on it for this year-end audit. As well, here you'll notice the concept of materiality. Now, just to clarify, when we provide an opinion, again, I know the thunder has been taken that it's a clean audit opinion, but essentially here what we've done is every single audit we perform, we set a benchmark. And so you can see here that the materiality for the corporation and municipality of Sioux Lookout is $1 million. Public Library Board was 11,000 and trust funds was 5. Again, this is developed based on benchmarks such as revenue or assets and at a specific percentage. But again, we assess the level of risk associated in an organization to determine it. And so essentially, if there were errors, for example, within the municipality of Sioux Lookout that were over $1 million, the opinion would be changed. So in this case, we presented to you all the adjustments that were recommended and the items that were not adjusted. And those differences are well below the $1 million mark. And so therefore, we don't have errors identified over that mark, which as a result will allow us to issue a clean opinion. We've talked quite a bit about the fraud risk factor considerations, so we'll move on from there. And I'll just move on to Appendix B, which is the draft independent auditor's report. So I just want to read specific sections of this just to formalize the end result of the audit. So it notes here, we've audited the consolidated financial statements of the corporation of the municipality of Sioux Lookout, which comprises the consolidated statement of financial position as of December 31st, 2023, consolidated statements of operations, accumulated surplus, changes in net financial assets, and cash flow for the year then ended, and notes the consolidated financial statements. So in our opinion, the accompanying consolidated financial statements present fairly, in all material respects, the financial position of the corporation of the municipality of Sioux Lookout as at December 31st, 2023, and its results of its operations, its changes in net financial assets, its cash flows for the year then ended in accordance with Canadian public sector accounting standards. So essentially, just to summarize, that is a clean opinion, which is what you want to see. The remainder of the report is consistent from year over year. The basis for our opinion, again, comes from the fact that we're not just making our opinion based on our own matters. It is our body's Canadian generally accepted auditing standards. So our audit has been completed within those auditing standards. The only part that's different is the emphasis of matters note here, which again, this has to do with the fact that the ARO figures have been changed. So this is a paragraph that we note so that readers are aware to refer to note 1 to see those impacts and changes from the prior year figures. For the responsibilities of management and those charged with governance, again, just to highlight some items, again, these financial statements belong to management, and so therefore they are responsible ultimately for the preparation and the fair presentation of these statements, such as well maintaining their internal controls. Again, the other piece here, and this meets one of your reporting requirements, is those charged with governance are responsible for overseeing the municipality's financial reporting process. And so this is one of those actions that meet those requirements for the year-end audit. Here you'll notice our responsibility as your auditors. It's quite a list, and I'm not going to read it out. But what I do want to focus on is the last piece here, which does note that aside from our other responsibilities, we communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. So this conversation we're having, this meeting we're having, meets that obligation for us to be able to make sure that you've met your obligation as well as councillors and the mayor, of course, for the year-end audit perspective. The management representation letter itself here is in draft format, but this will be signed by Brian and Carly. As representations were made to us as your auditors, we want to make sure that there's no information that's been withheld for us or altered. So by signing this document, it holds management accountable to that all the facts and information that be presented to us, nothing has been withheld, and that the only identified misstatements that have been noted are the ones that, as you saw in the audit results earlier on. And so that will be signed as of today's date by Brian and Carly. Now, in terms of the internal control letter, I already mentioned and discussed this above that we really only have one finding. And this is a finding that will be consistent for the municipality unless there's other changes made. So again, the reason why we identify that there is the segregation of duties is because there's lack of restricted access to programs and data by your treasurer, who's responsible for financial reporting for the municipality. Again, those individuals shouldn't have the ability to create journal entries, and as well, there isn't necessarily a comprehensive journal entry process or policies in place. Now, we are aware that due to the size and the nature of municipality, it doesn't make sense and it's not always cost feasible for there to be another individual to take that responsibility away. So we do identify that there is compensating controls in place that mitigate this risk. But again, as I mentioned, we also perform additional audit procedures to address this risk within our audit. And as we mentioned earlier, there's no concerns to note. So that concludes that piece. Appendix E, F, and G. I'm not going to go through in more detail. Appendix E talks about the cybersecurity matters. So again, we encourage management to have the conversations with council or council vice versa with management to identify what's happening for cybersecurity protection. Appendix F and G are just the accounting developments and auditing developments. So those highlights that we discussed, that's presented here in a lot more detail. So again, this is where we would encourage management to take a look to understand what changes are coming that would impact them. So that is the audit strategy and audit results package. The next thing we'll do is move on to the financial statements, but I'd like to take a moment just to stop, because I know I've said a lot, and see if there's any questions from any of the members of council.
Councilor Tibbs.
Yeah, I wonder if you would mind going over the issues you identified about the library, public library. I'm on the board, I'd like to know more about that. Just looking at what page it was on.
I'm sorry, I had a hard time hearing you,
It's a
Councillor.
misstatement or something.
Oh,
Concerning the library.
yeah, concerning the library, that misstatement,
Page is that?
it's not a misstatement necessarily because the adjustment has been reflected, but essentially the
Sorry,
2020.
What page is it on?
Oh, it should be on page 8 of the document.
Okay.
So that
Yeah,
96,000.
You were talking.
Yeah, of course. So
Okay,
that $96,417 essentially was recognized by management as deferred, as technically it was intended to be for Q1 of the library for 2024. However, because the financial statements have to be presented under public sector accounting standards, and there's no specific stipulations in terms of what that funding needs to be spent for, because it really is there to support the global operations of the library, because the funds have actually physically transferred within 2023, even though it was intended for 2024 budget, it had to be recognized as revenue. So for the Public Library Board, it shows as though it earned more money than what was budgeted from the municipality because the funds were physically transferred in order to support the operations of the Public Library Board. And that is a public sector accounting standard assessment that was completed to support that. So essentially what we did is we moved it out of deferred revenue for the library and recognized it as part of the annual surplus.
So the library technically has a surplus of 96,417.
That was one.
I don't really get what you're trying to say.
So what I'm just trying to say essentially is that because the municipality transferred.
Slower, because I'm not an accountant. I'm not good at this.
That's no problem. So this isn't reflecting what your actual end surplus is. If you wanted to see what the operations of the Public Library Board are, there were Public Library Board financial statements that are available. What I'm saying is that through our audit, we identified an adjustment of $96,417 to your bottom line surplus as an increase. So the surplus actually increased by $96,417 from the results. Again, we can go through the public library statements. Normally we don't in detail at these meetings, but there should be draft copies available to review in terms of what the total surplus was for the library.
Trevor, did you want to make a comment?
Yes, so through you, Mayor Lawrence. So what occurred was the public library requested the first quarter's payment on December 29th. And the check was issued at the end of December and given to the library. And then the library deposited those funds into their bank account at the end of December, which was actually for the following year. So that's what occurred.
Okay, so it's just.
It's a timing thing. Yeah, so this year what we're doing is we're not gonna put the first quarter payment on our books and on your books until the new year has started.
Okay.
Yeah. Does that make sense?
Yeah. It sounded a lot more complicated than that.
Yeah, and it's just for what Richard is trying to explain, just from an audit point of view and a PSAB point of view, it falls under different rules and regulations of how it has to be tracked and managed from an audited finance point of view.
Okay.
Okay?
Mhm.
Okay.
Council, anything else? Good, Councilor Simpson, yeah?
Yeah.
All right, back to you, Richard, thank you.
Thank you very much. So we'll move on to the financial statements next. And so again, we'll jump right into the numbers. Again, already went through the independent auditor's report itself here, so I'm not going to go through it again. It mimics essentially what we just saw in the last report. And we'll start with the statement of financial position. I'm just going to open up my document here. Perfect. So the first thing we'll just notice some of the larger changes that have happened cash and cash equivalents, as you can see, has decreased by about $5.1 million from where it was last year. Just to kind of summarize where that cash flow went, in the year, your operations generated just above $7.4 million. You received dividends of about $207,000 from Sioux Lookout Hydro. Financing costs in terms of repaying of debt was just under 1.4 million, and there was capital funds that were utilized of $11.4 million. So there's a lot of capital projects that essentially, although your operations generated positive cash flow, capital really drained a significant amount of that cash that was there existing last year. As well, looking at accounts receivable, you can notice that your accounts receivable changed by about $1.8 million. And again, this is primarily because of a few things. One, because there was a lot of capital, there's quite a bit of HST receivable that's outstanding at the end of the year, about 2.2 million. Majority of that has been collected as of to date. So again, it's just a matter of the expenses incurred in the year. And as well, there were some grants receivable with NOHFC and FedNor for just under $2 million as well associated with it. Again, some of this is all timing. So we just identified some of the bigger items that make up the $5 million itself there. So total financial assets for the municipality at the end of the year are just over $19.9 million. In regards to your liabilities, you'll notice that overall, your accounts payable hasn't changed significantly, but it has increased a bit. And again, this is just because there was construction work that was still ongoing and therefore bills at December that haven't been paid. So normally your accounts payable isn't this high, but because there's been quite a bit of construction capital assets, it has been consistent from the prior to current year, just more capital at this end year, therefore increasing your payables. Deferred revenue changed by about $545,000, and there's quite a bit of movement here. Your OSIF funding increased by about $475,000 that has been set aside. There's NORDS funding about $140,000 that was set aside as well. There's also funding set aside for outdoor washrooms as well for about $172,000. And then in terms of gas tax, you received $349,000 in the year, but you utilized $491,000 of that gas tax funding, which was some of prior years outstanding deferred, and the funds that were received in the current year. So those considerations makes up for the increase of the $545,000 in your deferred revenue. Your debt decreased by just under 1.4 million. And again, this is because of the repayment of the various debts in the year. Nothing new or unique there, just basically making the principal repayments that are required with the financial institutions themselves. So that develops total liabilities of $22,548,000, which puts the organization, or the municipality, should I say, in a net debt position of just under $2.6 million. The other assets or non-financial assets that are present for the municipality is the consideration of your tangible capital assets, which again, we spoke about what that's made up of, primarily capital additions associated with work done on Hillcrest and Bigfoot and some other rural road projects that were considered. And you'll notice that your prepaid expenses have also increased in the year. This is primarily just because the fee associated with your insurance for the municipality was paid before the end of the year in full rather than paid in the next year. So because that insurance relates to the following year, we have essentially increased our prepaid expenses associated with that insurance. So that benefit will be utilized in 2024. So that is the statement of financial position. Just wanted to take a pause to see if there's any questions on that before I move forward to the statement of operations.
Johnson? Back to you, Richard.
Thank you. So we'll be moving on then to the statement of operations here. So just to focus on a couple factors, under taxation, you'll notice that your residential and farm taxation quite different from last year and above budget. So from a budget perspective, there's a difference of about $230,000. That's essentially as a result of a net effect of recovery from your allowance for doubtful accounts for taxes receivable, but then also written off by the net write-offs of $436,000. So the net impact of the recovery of $669,000, but the current year net write-offs essentially creates that difference of $232,000. Now, when we look at last year, you'll notice that 8.6 to 9.5, quite a big jump, almost $1 million there. So again, the reason for that increase is because there was an allowance for doubtful account recovery of about $669,000, which again relates to your taxes receivable. And then residential tax levy also increased by about $237,000. So that was the biggest impact associated within your taxation, which you can see that from a total perspective, you did better than the budget and significantly increased by about $1 million from last year. In terms of the user charges, water and sewer billing, pretty consistent, nothing too concerning. Again, there was increases with water and sewer billing, so anticipated to see some increases there from last year. For other fees and service charges, quite a bit of activity in this one. So when it comes down from your budget to actual perspective, you're about $470,000 in the green, I guess you could say, associated with this one. And so when we looked at to see why there was a difference, a couple things we noted. One, municipal accommodation tax is not a budgeted item that's considered when you're budgeting, and that was about $466,000 of revenue that was earned. Airport operations generated $879,000 more than what was budgeted. So again, airport operations had a big increase, and landfill fees were about $120,000 over. Now, when you add all those factors together, that's not a $470,000 difference. One of the things that was budgeted for but had no actual activity in the year was land sale and agreements for about just over $1 million. And so that was a consideration of something to happen that didn't happen in the year. So once you consider that effect, that's where we get to a change or a difference about 470,000. In comparison to last year, again, the biggest impact is the airport operations have just improved overall. Airport facility fees were increased by about 151,000. Municipal accommodation tax was 156,000 higher. Airport improvement fees about 228, and plane servicing about 235. And so when we get to the other revenue, you'll see a corresponding increase associated with the revenue earned from the sale of your fuel, but also the costs associated with it. So your other fees and service charges generated income of just about 10.1 million, which again is higher than the budget amount of 9,564,000. So moving on to the government transfers piece. From this perspective, definitely see some increases in the Government of Canada, some decreases in the province of Ontario. When we look at the Government of Canada piece, from a yearly perspective, you can see there's a change of about 832,000 from last year to this year. That's primarily as a result of just being more grant activity in the year. Again, recognizing the federal gas tax of 491,000 for work done on Third Front and some rural roads, as well as the FedNor funds associated with Hillcrest and Bigwood for just above $1.1 million. Again, there was some activity that didn't happen that was there last year, so that's what makes up the majority of that Government of Canada funds in the year. The province of Ontario did decrease, but again, there was some bigger province of Ontario funding that was obtained last year, such as emergency control revenue, about 249,000. There was a significant amount of funding spent associated with Wellington and First Avenue that ISIP has funded, and FedNor funds that were recognized as a result of the waterfront for about 440,000. So in the current year, the biggest province of Ontario revenues that has been received is OMPF funding, Bigwood funding, and Hillcrest funding from NOHFC. So again, just different projects that were ongoing in the year, but again, the Bigwood and Hillcrest projects were definitely the biggest. The other piece that I would like to identify is this is the first full year where there wasn't child services provided directly by the municipality. So again, a lot of that funding itself has not been recognized or earned this year because, again, that's been transferred along to the Kenora District Services Board. So total revenue recognized for government transfers is about 4.8 million, which is actually fairly close to the budgeted amount that has been recognized by council. So just moving on to the other piece of items for investment income, you'll notice that the actual investment income earned in the year is significantly higher than budgeted and significantly higher than the prior year. This has to do with some of the rates, again, associated with borrowing cost. When there's money now sitting in a bank account, it's earned a lot more. And again, throughout the year, although your total cash balance has decreased from 14 million to 9 million, those funds that were sitting there have generated some substantial interest in the year. So overall, it's not a bad thing, but as a result, quite different than where the budget to actuals have resulted in. The other item that we'll note is the sale of aviation fuel. So in general, no different than us reflecting on the user charges revenue from the airport. You can see that sale of aviation fuel from a budget perspective was about 2.7 or $2.8 million short. And from a prior year has increased essentially by $1.8 million. So obviously great news there. But essentially just because of more traffic, more individuals, more passengers. So therefore more sale of aviation fuel. The only other item in the other revenue I'd like to focus on is just the other piece here at the bottom. You'll notice last year it was only 12,000, this year 208,000. Why? Well, there's some sale of lands from a commercial and residential perspective that equated to about $198,000. So that's recognized there in terms of the disposal of those items there, which have increased your total other revenue. So your other revenue equates to just over $15.2 million, which results in revenues of $42.7 million recognized this year as compared to last year's of just under 39 million and your budget just above 38 million. So I will move on to the expenses next. And again, your expenses are broken out based on your segments. So I'll try to focus on some of the larger areas again. Your general government, overall from a budget to actual perspective, did change by about $400,000. Again, some of the things we noted in the budget perspective is that there was $320,000 transferred to the Sioux Lookout Chamber of Commerce that was not budgeted for in 2023. From a yearly perspective, we noted that wages and benefits did increase overall quite a bit. That makes up the majority of the difference. And this has to do with facilities, human resources, and treasury. As well, we noted that contracted fees had an increase of about $158,000 as well in there. With transportation services, the biggest impact here aligns essentially with the airport. So again, in terms of a budget perspective, we're about $1.6 million higher from budget and about $1.9 million higher from prior year. Again, what we noted is that from a budget perspective and as well from an actual, purchase of jet fuel itself was $3.3 million higher than was budgeted. Similarly, wages were about $452,000 lower than budgeted, and contracted services were also about $155,000 lower than budgeted. In regards to a current year to prior year consideration, we note that the purchase of Jet A fuel was $2.1 million higher, and the airport bad debts decreased by about $240,000 from the prior year. So collections were definitely better with the airport. From an environmental service perspective, again, here, the budget piece is probably the biggest deviation, about $626,000. So some of the things that we noted where the expenses were under budget were areas such as wages and benefits, about $233,000. Materials and contracted services accounted for about $270,000 less activity in the year. And in general, that just relates to, again, just less activity associated with some of those environmental services that were provided. The social and family service piece, again, one of the biggest things for the difference just relates back to the childcare centers. Last year, it was run until about April 1st. This year, not active at all. So as a result, that is the biggest reason for the decrease in expenses under social and family services. Recreation and cultural services, the biggest thing I would just note, budget was fairly close, but from prior to current year, there was an increase. And again, increases here just really primarily relate to increases in wages and benefits for the arena, fitness center, and as well increase in general materials, which made up the biggest difference. So your expenses in the year for the municipality were just over $37,328,000, which gives you essentially a net annual surplus before considering any losses on disposal of tangible capital assets of about $5.4 million. With the consideration of the loss on tangible capital assets, there was an annual surplus of just over $5.3 million. Now, the figures down below in terms of what builds up your accumulated surplus, you'll notice that there is a correction of prior period. Note 1 breaks down essentially what these changes related to, which again, this all relates to the asset retirement obligation adoption. So again, that's about a $460,000 impact in the current year, and it was about a $456,000 impact in the prior year. But that essentially covers the statement of operations. So I'll pause now before I take you through some of the notes and other items in the back of the statements. So I'd just like to pass it through your worship to see if there's any questions from councillors.
Council, questions? Richard,
Okay.
I do, a question, comment. I'd like to come back to this screen in a moment, but could you go back up to other, I think it's on the page, at the top of the page. A little bit higher. A little bit
Is it
higher.
okay?
Had to do, right there, yeah. So taxation from other governments.
Yes,
Is that property taxation that we receive from other governments?
that's to my understanding correct.
So 732,000, and that's in consideration, and this would be for staff as much as Richard, of all the government buildings that we see around us. This is what we get for property taxation.
Through you, Mayor Lawrence, yes, that's correct.
And how does that, well, I won't put you on the spot, but I'm just, what a small amount when you look at all the government buildings in this town and how reliant we are on government services. Thanks. I just wanted to clarify. So that is the property taxation revenue. The next one, if you can go down one more page, Richard, thanks.
Yep.
And lower, the next page.
Oh.
Yeah, right there. So the expenses, 1, 2, 3, there are 9 categories, and these are the categories set out by the FIR, the financial reporting system from the province.
That's
And
correct.
We have to lump everything into these 9 categories, no matter what.
Yeah.
So this is for council's benefit, Richard, sorry.
No problem.
You'll see under transportation services, either one, it's about $20 million. Let's say that's half our budget, and that is, how much of that is the airport? 95%?
Probably a safe
98%?
bet.
Yeah, so roughly we have $20 million for the airport, and of that airport, quite simply, on our budget, half of that 20 million or more is aviation fuel.
Mhm.
So it makes it look like to an unskilled eye that our budget is $40 million. When in fact, $10 million is purely aviation fuel and another $10 million is operations of the airport. And CAO and I sat in a meeting with a minister who compared our policing costs to another municipality in terms of the percentage our policing costs were of our overall budget. That other community has an airport whose budget is probably $250,000. It's peanuts.
Mhm.
And yet, to the untrained, because these are provincial, we have to ram everything into these 9 sectors to report to the province. And then they look at it and say, they don't recognize the differences. It's a little bit of a rant, but this is part of what we're up against. And this is a minister who said, well, look, your policing costs are only 10% of your budget, including $10 million of aviation fuel and 10 million, which we operate the airport essentially for the provincial healthcare system. It brings people, 50, 60% of the traffic is for healthcare and no recognition of that. So in fact, penalized for it. Thanks, Richard. That was just, I had to get that in because that's, and we have no choice except to put, so under transportation system, our hub transit is in there as well,
That's correct.
which is several $100,000.
Along with Public Works and anything that they do as well.
So it just doesn't tell the story. Thank you.
No, not a problem. Thank you. Okay, so I just want at this point to take management and council through a couple different statements and a couple notes within the financial statements, primarily focusing on some of the changes. The statement of changes in net financial assets and debt essentially reconciles back to your statement of financial position based on where your annual surplus was. So this is just a reconciliation to show, the changes that essentially happened. So last year, for example, we had a lot stronger of a financial net asset position. So this is showing why, for example, the net financial position is now in a debt position. And again, it has a lot to do with the acquisition of those tangible capital assets. We'll speak a little bit more about it later on when we get to the accumulated surplus, but that there just does a reconciliation to that financial debt position that's showed on the statement of financial position. Your statement of cash flows is just a reconciliation from your annual surplus to support where your funds have flown. So again, when I was talking about the changes in cash, those figures are coming directly from here, where it notes that your operation transactions generated about 7.4 million, your tangible capital assets cost you 11.4 million, dividends from Sioux Lookout Hydro is about 207,000, and the debt principal repayments is just under 1.4 million. So that's what resulted in your cash decrease of just 5.1 million, which reconciles to the cash balance that was showing on your statement of financial position. Now, getting into the notes of the statements, again, a lot of them have not changed, but there has been some changes. So again, one of the things that has changed is the recognition of the asset retirement obligation. And the purpose of this note is here to show what we presented in the audited statements that were approved by council last year. So just as a summary, last year you had landfill closure and post-closure liability for 595,000 recognized through the application of the asset retirement obligation. You can see that we had the 1.7 million recognized within that liability piece. Your tangible capital assets went up by about 645,000. And as a result, your accumulated surplus is impacted by about 460,000. And this display is shown throughout all of these charts, which relate back to all the statements. So this is here to show essentially that if someone wanted to compare last year to this year, this note specifically identifies the recognition of what changes happened and why. So I'm not going to go through it in detail, but again, it all has to do with the adoption of PS 3280. The other aspect that was adopted was the financial instruments in foreign currency. So this one didn't actually have a significant impact overall on the operations, but just to put it in perspective, if management or council decided to put their investments in mutual funds or stocks or bonds, there would actually be another statement that would be attached to these financials, which would essentially tell council members and the users of the statements what investments you have and whether or not currently on those investments there's a unrecognized loss or gain position. Now, because of the fact that majority of your funds or excess funds are just held in high interest savings accounts and nothing too complex, this statement has not been adopted by the municipality. However, if there were to be investments like that have to be assessed, there would be an additional statement that would be increased or recognized, within your financial statements. So in this case, it has been adopted. However, there has been no impact to your audited financial statements. These are just your significant accounting policies, which states essentially how management recognizes different aspects of revenue recognition and how other liabilities and assets are recognized. So this is consistent with the past. The only part that's really different is the asset retirement obligation. So if anyone is curious and doesn't want to ask questions, this is a great place to read and understand exactly what this application did and how it was adjusted and recognized within your statements. I'll just stop for a moment on the cash and cash equivalents because I think this provides a really good basis. So one of the things I would like to note is that although council, you have $9.5 million at the end of 2023 in the bank, about $2 million of it is restricted because of the deferred funds that are held to be used for future purposes, and $6.6 million of it is designated to support your reserves and reserve funds that are set aside. So really, in terms of accessible cash, it's the net effect of the 2 million, the decrease of 1.5 million, and the outstanding deposits. So essentially, there is still cash flow at the end of 2023 that relates to general operations, but a significant amount of it is also restricted and designated aside. I always like to be able to take this through with council so they're just aware of how much cash flow they actually have that's liquid and can be used for general purposes. The taxes and user charges receivables, again, I'll focus on the tax receivable side. So your gross taxes receivable from property and businesses and governments is just over $2.2 million. So you can see there is a bit of a decrease there, which is great. So collection efforts have improved. The allowance associated with that 2.2 million, though, is just over $1 million. So this is reflective of essentially different individuals, different businesses, different government agencies who just have not made payments, that they've been outstanding for a long enough period of time that the collection of it there's some doubt associated with it. Doesn't mean at the end of the day that management has de-recognized these receivables, but it's just saying from an accounting perspective, we honestly truly believe that of the taxes receivable, only 1.2 of it has some confidence in the collectability associated with it. The investment in government business enterprise, again, is just a reflection of the Sioux Lookout Hydro financial statements and essentially the impacts that increases the value of your investment in Sioux Lookout Hydro. So again, it talks about the revenues and expenses they've incurred, but also the dividends that were issued and received associated with it. So this just supports essentially the value of your investment within Sioux Lookout Hydro. Deferred revenue we've discussed, so I'm not going to go through in detail there, but this is just a reflection of the $1.9 million of restricted cash that we discussed that relates to funds that are deferred that need to be spent on specific means before being recognized. Debt, nothing interesting in terms of your debt notes to be discussed, pretty consistent. Again, note B within this note shows the expected principal repayments that are due. So this just provides a perspective from a budgeting of what capital, or should I say debt repayment that will be incurred in the following years. The asset retirement obligation is the new note. And so here it just talks about the basis of what do we anticipate that this liability would cost if the municipality had to address the landfills today. So as of 2023, we anticipate that if the municipality were to incur the cost, it would be just over 1.7 million. Now, this will always consistently change as the capacity of the new landfill continues on and gets larger, and the obligation and the cost will increase as a result. But it also considers the closed site as well, and the post-closure maintenance and testing that needs to happen. So again, this will continue to show up until that obligation is met. And again, for a municipality, a landfill is a very common thing. So these asset retirement obligations are very common. One other piece I just wanted to bring to council's attention is that you'll notice on the front of the financial statements that when it comes down to the budget, it doesn't have an annual surplus of nil. So the reason for that is because these financial statements are presented within public sector accounting standards. So there's certain transactions that under this standard would be recognized as expenses, and some that wouldn't be recognized as expenses. And so this note here is just to show that council did approve a balanced budget, but as a result of public sector, such as capital items that are expensed or included above, for public sector accounting standards, these aren't expenses. They are cash outflows for the municipality, but they are actually capitalized under public sector accounting. So this is just to show that when you look at the surplus budgeted for 2 million on the front of the financial statements, it's because of these adjustments that we've recognized. So I just want to, refer to council that you did have a balanced budget when it came down to your 2023 budget. And otherwise, that is the extent of the biggest changes. The other change that happened, again, through the adoption of PS 1208, my apologies, the financial instruments piece, there's some additional information that's included in your financial statements. And it really relates back to first identifying how are your financial instruments recognized? Are they recognized at cost or fair value? So right now, all of your assets are recognized at amortized cost or cost and not fair value. So again, if you had investments that were in the open market and fluctuated based on what the market did, it would identify here what that dollar value that is impacted by fair market value would be. Similarly, when we go down further, you'll notice some other charts here. And just to kind of represent the council in a simple way, is that this is management's assessment in terms of when these outstanding items will actually be collected. So again, we recognize that there's risks potentially in the collection of certain receivables, such as your taxes, user charge receivables, accounts receivables. So this provides a basis of a timeline of when management anticipated for these balances to be collected throughout the year. So it does it for 2023 and for 2022. So these are your receivables and management's assessment of when these will be collected so council can assess the cash flow position of the organization a little bit better. The other piece here is also reflective of your accounts payable. So we also worked with management to identify when are you going to pay off these payable amounts that are outstanding, and when is your debt repayment going to happen. So again, we've recognized this for 2023 and 2022, and the only financial instruments you have in this case are your accounts payable and your debt. The accounts payable, management has identified that there's no payable amounts that they don't anticipate will not be paid within the first year. And in regards to your debt, this aligns with what the repayment schedule was associated with your debt amounts that we discussed earlier when we were looking at the repayment schedule for your debt. So I'll move on to the schedule of accumulated surplus, and I think this is probably one of the most important schedules for council's attention. So one of the things I wanted to draw to your attention first is your reserves. So again, your total reserves themselves are essentially amounts that are internally restricted, and that's about $10.6 million. So again, hasn't changed significantly from the prior year. Your total reserve funds have increased by just under $1 million, and these are amounts essentially that are intended to be set aside, or funds being actually tangibly set aside in a separate bank account, which again, this relates to your designated funds that we talked about above, of funds that are actually set aside specifically for this reason. As well, within your accumulated surplus, you have your government business enterprise, which is your investment in Sioux Lookout Hydro of just over $3.6 million. Now, when it comes down to your surplus, there's a couple considerations that are in here. One, your investment in tangible capital assets. You have over $85 million that has been invested in your capital assets. And this is, again, representing what the value was on your statement of financial position. However, there are a couple unfunded items. There's debt about $15.5 million that still has to be repaid. There's employee future benefits right now in terms of $461,000 that are not being budgeted for. There's a small amount for Home for the Age of $664,000. And then there's your asset retirement obligation, which is essentially the landfill piece as well. So those are all unfunded amounts. And so essentially, once you take all of those into consideration, when you actually want to know your true municipal surplus or deficit in the year, it's a result of the change in your general fund. So when we look at the general fund, you'll notice that it was in a negative position last year, about 2.3 million. This year, it's in a negative position of 7.1, which means that technically the municipality had a deficit in the year of about 4.7 million. Now, with that being said, though, a big portion of that deficit relates to capital items where there hasn't been debt acquired to support those costs, and other elements. So associated with the Hillcrest and Big Wood project, there's a big portion of it essentially where the municipality incurred or utilized its own funds to pay for its portion. So if debt were to be incurred to cover some of these portions that the municipality covered with its own general funds, this will adjust itself. So a significant portion of that $7.1 million deficit is capital items that are not currently being funded through other means. So definitely something to have a conversation with management on, seeing where this might fall, for example, this year in 2024, if there has been funds received. But essentially your surplus at the end of the year is 60.4 million, which again, a big portion of that is supported through your investment in tangible capital assets itself. But this all builds up to what your accumulated surplus as presented on the statement of operations and financial position is reflected to show what is actually contained in here. The rest of the schedule, Schedule 2, is just a continuity schedule of your tangible capital assets. Again, as I mentioned, $11.4 million in additions, significant amount of that, assets under construction of 9.6. So that had to do with what we discussed in our audit results package. And last but not least, Schedule 3. I won't go through this in detail, but this essentially takes the segments that we discussed earlier and breaks it down within every single one. So here you can actually see the detailed expenses themselves by category of what it's made up of, and similarly the revenue side of items within each respective department. I won't go through it, but essentially this aligns with what the statement of operations states. So I won't go through this in any more detail, and that will conclude my presentation of the annual 2023 audited financial statements of the municipality of Sioux Lookout. So I'll pass it back to your worship. Thank you very much.
Thank you, Richard. Council, questions? See, I'll ask just a question on the debt. The debt includes the airport debt. It's the debt repayment, and the number was in 2022. I think 1.237 million, and then it's going up to 1.4, maybe that was. But does that include airport debt repayment as well? It does.
It does.
And how any idea how much of the airport debt is does that constitute 10%, 20% of that number roughly?
Through you, Mayor Lawrence, I don't have that number.
Okay, so if we take there's ratios that the province wants municipalities to operate in, how much of the budget is debt repayment. If we took the airport debt out of that and we took the airport budget out, so our municipal budget then is whatever, $19 million, whatever. How does that ratio, say 1 million to $19 million, 1 million, 1.2 million of debt repayment fit in the provincial ratios that are allowed?
Through you, Mayor Lawrence, I'd have to do an analysis to give you a number that I'm comfortable with.
But is the provincial number, the ratio, I thought it was up to a maximum of 25% of your annual budget, is that?
It's up to a max of your revenue for what you bring in for your budget, which also includes the airport. So you'd have to take out all the revenue that the airport currently has. And then you would also have to take out any sort of revenue that the municipality receives from the airport, from that to kind of come up with what that number would look like.
It's just that airport budget is, I know the airport is a department of the municipality, so to speak, then it sort of doubles our budget, and then, but we've done some significant projects at the airport that have incurred debt, which are paid for through user fees as well, right? But they show up as part of our overall debt. Just, well, that's good. Doesn't have to be at budget time. It's just an overall question. How the airport does really impact our our financial statements in a way that other municipalities might not see. Councillor Timpson.
Yeah, so do we have a surplus to carry over to 2024?
Through you, Mayor Lawrence, we do have a surplus. Once the financial statements have been fully finalized and the year-end adjustments have been received and entered into the system, I'll be preparing a document for council to review. I'm not comfortable giving a number at this time.
Can't have the cake until it's baked. Leave it until it's ready.
Just curious, in the last one here,
Microphone, Councillor Timpson.
sorry. I just lost it. In the last slide, it had, accumulated or deficit of 600, yeah, can you explain that a little bit more?
Absolutely. So essentially at the end of the day, and maybe the best way I can explain this is, a for-profit organization would have something known as retained earnings, essentially, right? And essentially the benefit of a business is that the shareholders can take that money and take it out as dividend or income. For a municipality, it's a little bit different. The intention of municipality is longevity, to keep the municipality operating. And so essentially, at the end of the day, your retained earnings is $83 million. However, the part about it is that, again, we recognize in a municipality that you're going to be investing a significant amount of your funding into tangible capital assets. And there's certain amounts in this case that are unfunded. So what I will say is that right now, this general fund shows that currently, since the lifetime of the municipality is in a deficit of $7.1 million. However, what I will say is that that can change very easily through the utilization of your reserve and reserve funds, right? So right now, management has chosen to leave these reserve and reserve fund amounts of 10.6 million and 8.5 million, for example. So this again, deficit exists mainly because of the fact that your capital projects, although some of it has been supported through government transfers, there's a portion of it that the municipality has to pay for. Now, normally this will either be supported through a reserve or a reserve fund or through the acquisition of new debt. But in this case here, that portion of the costs that had to be incurred by the municipality were not covered by anything. So as a result of it, it had a big impact on your general fund, which shows, again, the change from prior to current year is a deficit of 4.7 million. But from the continuity of the municipality since the beginning of its inception has developed a general fund deficit of $7.1 million. Now, again, this could be cleared or decreased if, again, as you can see here, there's $5.6 million set aside for capital expenditures within your reserve. So that deficit, if that reserve funding were to be used, could very easily decrease this value to support the payment here. However, management has not made that decision to utilize reserve or reserve funds or made that recommendation to council, for example. So as it's presented here in the audited financial statements, we're showing that deficit of $7.1 million. Maybe I'll refer to council, to management on this, maybe because there's the intention of acquiring debt to support some of those portions that were not funded that hit the municipality. But essentially, that's why that deficit does exist, is primarily because of capital purposes.
No further, council. I see nothing, Richard. Back to you or staff.
Thank you very much. That concludes the remainder of my presentation, so I'll pass it back to management from here. Thank you.
Through you, Mayor Lawrence. First off, I would like to congratulate my finance department for doing such a good job with putting all the additional documents together, and also for the management team that worked very hard with me this year to give the auditors the information that they needed in regards to the extra documentation and everything else. And for the asbestos, I'm very happy and very pleased with what my staff was able to do this year to make this year's audit, even though it is the end of this year, to run a lot smoother and provide a lot more information to the auditors than what we've had to do before due to provincial legislation and stuff that has come down. Other than that, we're very happy with the outcome. There's nothing that really has come to a surprise to us, which I'm very happy on as well.
Thank you, Carly, and through you, Mayor Lawrence. Very happy that once again, we have a clean audit, that there are no concerns raised by the auditors with respect to anything that's of consequence with respect to our financial matters. I want to thank Carly and her team and the rest of the management team for their hard work. I also want to thank Richard and his team for all their hard work. And while I know that auditors have to maintain that independence, we are very grateful that they are extraordinarily professional and very good to work with. And I know that that's appreciated by everyone on our end. So thank you, Richard, to you and your team for always being professional and for working with us to ensure that you're getting everything you need to do your job. So thanks very much.
Thank you for the kind words.
I think on behalf of council, I can say how much we appreciate getting the audit statement for last year and this year, which is 2023 plus one instead of 2023 plus two. So good job, well done. And I like in the clean audit, it's I like when we get our water, our drinking water reports, when that's clean, because we could go to jail on that fund. On this one, we won't go to jail on it, but the public is much more probably interested in a clean financial audit. So congratulations to staff. Thank you very much, Richard, to you and your staff. CEO, thank you.
Thank you. Take care.
Take care.
That's that.
Yes.
So that now we move into closed session.
Oh, sorry, just the resolution to adopt as 5.1.
Thank you. The council adopts the year ending December 31st, 2023 municipal consolidated financial statements as presented by Grant Thornton at the December 12th, 2024 special council meeting. Moved by Councillor Cassidy, seconded by Councillor Lego. All in favor? Carried. Thank you. Now we move into closed session at 6:47 p.m. for subject matter relating to education and training to council members pursuant to Municipal Act 2001 as amended, section 239, 3.1, one item budgeting. Moved by Councillor Cassidy, seconded by Councillor Costco. All in favor? Carried. That was a double action.
Yeah.
Now we got